Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to provide an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. We do have several different tiers available, including a free one, so make sure you check it out. Links in the description below. Let's go ahead and jump in. So this is actually somewhat of an interesting time to provide an update to the bull market support band because we actually have our first weekly open and close above both the 20-week SMA and the 21-week EMA for the first time since March of 2022. Okay. Furthermore, this move here, we actually have seen some follow through, at least so far, right? I mean, it's hard to say what this week's going to bring, but at least so far, we have seen follow through, which was not the case over here back in March of 2022. And we even said back then that, despite the fact that we broke above the 20-week SMA, we were still likely going to get rejected by the 200-day, which is in fact ultimately where we got rejected from. We had the higher lows, the failure to put in a higher low after the rejection of the 200-day SMA, and we ended up going down. And what's interesting is despite all of the all of the hype and everything that we had throughout 2022, everything was ultimately just a failed rally, right? Throughout 2022. And what you'll notice is that literally every step of the way, it was just yet another rejection right around the bull market support band, or again, if you prefer, the bear market resistance band. Now, for the first time in quite a long time, we find ourselves above this level. So then it sort of raises the question, well, what does that mean going forward? Well, to understand what it potentially could mean going forward, we can always look to see what it has historically meant. What it meant in the last two cycles was different than what it meant in the first one. So we'll at least start with trying to understand that. If you go look at what it meant in 2019, it meant we had a rally for a while, but unfortunately, we did not back test the bull market support band quickly, and we ended up just falling below it and having another like 8 or 9 month bear market, right? So that's what happened in 2019 once we passed it. 2015 was a different story. This one, we rallied above it. We actually had one weekly close above it, and then and we had a full candle here above it, and then we ultimately just came back down to some of the prior lows, right? We don't really have a ton of data points. And then if you go look at 2011, 2012, it was actually, let me switch it over to one that actually has that data because this one doesn't. So if we go back to the 2011, 2012 timeframe, once we got back above it, we more or less we rallied above it, we came back down, held it as support for a while, and then we started a new cycle, or a new bull market, I should say. So then what does that mean for today? So first of all, we should note that we don't really have a ton of data points, okay? Out of the last three phases where we, came out of a bear market, a year-long bear market or something, two of those times, the first attempt was not held. One of those attempts, we rallied a lot higher. One of those times, we basically started correcting at this point, and we failed to hold it. But at least the last two tries, the last two cycles coming off of that primary bear market year, it was unable to hold on the first attempt. I would say, and we've sort of generally seen this, the more that it rallies before retesting it, right? So like, you can see over here in 2019, and of course, there's the 2020 run. I don't think we're anywhere near a 2020 type run right now, but one of the things you'll notice is that when it rallies a lot without back testing it, it tends to not hold when it retests. But look over here, right? It did not rally that much, and then we ultimately held it as support on the back test. Look at what happened in 2017, right? We never rallied too far above it, and then we just kept back testing it, holding it as support, and continuing on. So I would say that the further we go above it, the less likely we'll eventually hold it. The sooner we go back, there's at least a higher probability, I would argue, that we could actually try to hold it as support. But one of the things to look at, I think it's always important to look at these things a few different ways and to think about what strategy you're going to employ, because I see a lot of comments about people trying to figure out, what strategy should they go with? Should they try to time something exactly? I've said before, if you go back and watch any of my videos for years and years and years, a DCA strategy in and a DCA strategy out is typically the best thing to do. Even if you think the price is going to go lower or whatever, DCA usually wins over the long haul because, and we said that back over here, right? Even though I said I thought we were going to see some type of a breakdown in November, it doesn't change the fact that a DCA strategy isn't worthwhile over the long haul, right? As long as you have sort of a long enough outlook. But one of the things I wanted to point out is you can look at this in a number of different ways, but one of the ways you can look at it is a range, right? And with the top part of that range being around that 24 to 25K level, and the bottom part of that range being at around that 17 to 18K level. And you could argue that this was a deviation below the range, okay? And if we make it up to the top of the range, which is not that much higher than we currently are, then that's going to be an interesting level of resistance. Doesn't mean you can't deviate above it though in the same way. So I understand there's a lot of emotion, there's a lot of, hype right now, but until proven otherwise, right, we do remain in some type of a range that's been going on since June of 2022. And I would be looking for what happens when we get a pullback, right? Whenever that occurs, whether it's this week, a month from now, 2 months from now, when we get a pullback, are we able to hold this as support? It ranges right now from around 18.7K to around 20K. Okay, so it's about a $1,300 range. That's where it currently stands. That would be the line in the sand that the bulls would want to hold in order to see a much more sustained move to the upside. But again, the quicker it goes to the upside, then it likely just means where there's going to be more pain later on. One of the things that we mentioned, and we've said this a number of times, is that we've had 3 primary bear market years, right? 3 of them: 2014, 2018, and 2022. And it's really not any more complicated than that, right? You had 2014, 2018, and 2022. After those primary bear market years, we then more or less went sideways. 2019 was sort of sideways, although there was a bit more price action in both directions than 2015. And so, you're looking at 2023, and, one of the things that I said last year in 2022, I said it quite frequently, was that cash was king, right? I say cash is king all the time. The Fed's raising interest rates at the most aggressive rate we've really ever seen them. They are going through a period of quantitative tightening, rolling off assets from the balance sheet, and we just simply know that in periods like that, cash is king. Where does it stand in 2023? Well, as I said a few weeks ago, right, I think that there's going to be phases this year where it's king and phases where it's not. Like, there are going to be some moves to the upside, just like we saw back over here in 2015 and in 2019. But at the end of the day, I think it's just going to be building out some type of a macro base, is, I would say, the path of least resistance. Okay. Now, there's also sort of this discussion as to, ultimately, can it come back down and retest lows? History shows us that it does tend to do that, right? You see it in 2015. We also sort of saw it in 2019, but it was actually it was a higher low. It wasn't really a double bottom. It was a higher low. And so, right now, I think that we're likely just sort of in this choppy range for a while, and that's likely going to be the path of least resistance for a bit. And there's also I see all sorts of discussions about whether the bottom is in or not. Look, no, I mean, we have 2 examples, right? We have 2015, we have 2019. In 2019, the bottom was already in. In 2015, it wasn't, and the bottom came actually in January of 2015. So my point is that you are likely going to have a year where it's painful for both sides. So, we've looked at some of the monthly returns for Bitcoin in 2015 and 2019. One of the things you'll notice is that you typically spend about half the year with red months and half the year with green months. And they're not all necessarily back to back, but about half the time it's painful for the bears, about half the time it's painful for the bulls. That way everyone gets equivalently wrecked before, typically the next bull market starts, right? So the bulls get wrecked, the bears get wrecked, and then by the time you get to the next Bitcoin halving, everyone's wrecked. And then, when you actually see that move to new all-time highs, no one really believes it because everyone just spent the last 2 years getting wrecked. So that is, something to consider is that it will likely be painful for for both the bulls and the bears for a large duration of this year. And clearly it's starting out for a point with the bulls, with Bitcoin rallying a significant amount here in January. And as we previously discussed, there will likely be deviations in both directions, as we've seen every year following a primary bear market year. So right now, Bitcoin is at 22.7. Again, the bull market support band is around 18.7 to 20K. So if you do see a pullback in the next couple of weeks, that would be the area to look for. If we rally on up to 25K, you probably will find some resistance there. But again, you can deviate to the upside in the same way that you can deviate to the downside. All right, something to remember as we continue to push forward. And again, the last thing I'll say, we've been doing a lot of macro videos recently, so I see some comments, people saying, well, how can the price rally if a recession is coming? Look, guys, we've been talking about the recession risk, basically since the summer of 2022. But what have we also said? The indicators, like the inversion of the yield curve, right? Like the inversion of the 2-year and the 10-year, the 3-month and the 10-year. When you get the inversion, you're not usually in a recession. It means one is likely going to come eventually, right? We also had an inversion in 2019, right? But it still took a while before we actually got that. Well, I mean, we got the very brief recession in 2020. I'm not going to argue about whether it predicted or not, but I think you have to remember that if you're in the camp that a recession will eventually come, doesn't mean it's going to come tomorrow. It could come 4 months from now, or 6 months from now, or 12 months from now, right? The inversion of the 2-year and the 10-year happened back in July. And even though it happened in July, Bitcoin still rallied to 25K, right? Back over here, it still rallied to 21K from 18K, even with the inversion. So you can still see price action do all sorts of things, even if it looks like something like that's coming. It's just markets take a long time to really play out, right? And it takes a long time for the rate hikes to be felt by the economy, and the market goes through all sorts of phases of pricing various things into it, right? So, I mean, things are priced in the market in very different ways over very long periods of time. And so that's what I would argue is, you can always see moves to the upside. And perhaps, I mean, if you think back to what happened in 2020, this here was sort of it was a very brief recession. I still remember in this range back over here, there were actually a lot of people that were quite bullish going into early 2020. And, if you go back and look at what people were saying back then, a lot of signals were flashing that this was the start of the new bull market, right? I wasn't as convinced, right? Like I did not think this was the start. Over here, I was, really making a lot of videos saying, hey, it looks like we're getting moving. But to be completely fair, it went up a lot quicker than I thought it was going to, right? So one thing to keep in mind is that this here happened. This is what happened during the only recession that we have had for Bitcoin. It was very, very brief. Okay, so you could always see something similar, right? Where where Bitcoin spends a while in this range, and then it it eventually comes down into a recession, and it could sweep the lows, it could put in a higher low, it could put in a lower low. But again, no matter what, you need to have a strategy, and you need to stick to it, I think, for quite a long period of time to be successful in crypto. Historically, time is what is the most important thing in crypto. I mean, we have 1,000 different indicators you can look at, but the main secret to crypto has never been that complicated, right? The main secret to crypto is just don't leave, right? Like, just don't leave. That's the hardest part. It's the hardest part for a lot of people is to just simply not leave. So, what I think is that this year will likely be a bit of a choppy year. I do understand there's calls for echo bubbles and rallies back up to like 45K and stuff, but I think there's a good chance that Bitcoin is just going to be building out some type of a macro base here over the course of this year. And I think that the next sustained bull run with a real chance of going to new highs will occur after the yield curve and the inversion of the yield curve is resolved. Okay, it'll probably occur after that. Between now and then, going to be some very choppy behavior in both directions. So that's sort of what I'm thinking as we continue to move forward. But again, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up. We do have Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.